Hello, dear learner. Welcome back to our lessons. As usual, our YouTube channel, Wilfred Mumanyi Onkangi Kiongozi. I'm now teaching you something very interesting. And as you can see on the board, we have reverse income tax. In our previous lesson, we talked about the other ways of calculating income tax. And of course, we talked about a direct formula for calculation of income tax. And in this case, we had basic salary being given. We had probably allowances also being given. And we said you start with the taxable income or the gross income. We can also call it the gross salary from our previous lesson. In this chapter, in this lesson, I will take a moment and show you how, when you are not given basic salary, you don't have basic salary, but you are given two things. You are given pay as you earn, you're given the tax, and you're also given the relief if there is any. You're given the relief. So, our question for reverse income tax begins from pay as you earn and relief. I have a table here, and in this table I remember explaining a few things about the nature of the table. Our table today, on the left hand side, we have taxable income in Kenyan pounds, and then of course at the rate we have shillings per pound. This one we said we shall be multiplying without dividing by 20. I have an example for you, and I would want us to read this example together, then sort a few things out, then answer these 4 questions here. Have somewhere to write and enjoy this lesson. Kiongozi pays 4,000 shillings as pay as you earn. 4,000 shillings as pay as you earn, or tax, per month. Very crucial. He has a monthly house allowance of 10,800 shillings and is entitled to a personal relief of shillings 1,100 per month. Determine Kiongozi's gross tax. Roman 1, gross tax. This is tax before relief, or we can call it total tax. It is 2 marks. So what we do, we will have the pay as you earn. Now our gross tax is equals to pay as you earn, or net tax, or income tax, all the 4 names that we gave to it, plus relief. That one gives you 2 marks. Our pay as you earn is 4,000, plus the relief is 1,100. If you add this, you get your money in shillings, and you will have 5,100 shillings. Remember the units, and of course, do as part of the requirement of the question. The question requires us to give our value in shillings per annum. This is per month. So if you want to get per annum, you multiply with 12. This gives you multiply with 12 and you get 61,200 shillings. Important notes here: correct formula, correct application, and the units that you are given. Out of 10, we are looking for 8 more marks. Roman 2, calculate or determine his taxable income in pounds per annum or annually. This one has more marks. So the steps we are going to follow here are a bit long than the one that we have just completed. We have the gross tax we have added to the payee. We have the gross tax as 61,200, and this is the value, this is the amount of money we expect to help us get the taxable income. So what we do in reverse, once you have the gross tax, you don't look at where this amount lies in the table, like what we used to do in the other examples. What we shall do, we shall tax blindly because we don't know in which slab that money will be found. So I want us to go and follow the following steps. First, this money is in Kenyan pounds, so we start taxing quote unquote blindly. So we'll say 4,200 pounds multiply with 2 without dividing by 20. 2, then what comes out is gross tax, and it will be in shillings. So we shall have 8,400 shillings. I said that when the taxable income is in Kenyan pounds, then the rate is shillings per pound. You multiply without dividing by 20, and the answer or the outcome or gross tax is going to be in shillings. So we shall be looking at the time we arrive at 61,200, and we have started, we have 8,400. Next slab, you say 8,000 minus 4,200, which is that 800 times 3, which also gives us 11,400 shillings. We are still looking at the gross tax. Remember, we have 61,200, we have already gotten 8,400, we also have 11,400. We are still moving. We go to the next slab. The next slab is this one, and we shall say 12,600 minus 8,000, which is 4,600. You multiply with 5. This gives you, it gives you 23,000. So at this moment, I want us to be very keen to ensure that the amount of gross tax we get here does not exceed 61,200. So we first of all total this. I have done try and error to check whether I am approaching this amount that I have here. So when you total these ones, you get 42,000. You get 42,800. So you have 42,800, and remember you have a total of 61,200. You must look for the remaining gross tax, so that now our question will be looking at the number of pounds in the last slab. So the remaining here, remaining gross tax, we'll say 61,200, 61,200, subtract the total that we have here, 42,800. This one gives you 18,400. That is what is remaining on this side, so that you can balance the amount of money that you have in the gross tax with what you've already gotten when you do taxation. So this is what you do. You place this amount that remains here, 18,400, and then that slab has been multiplied with 6 here, and we have multiplied that with a certain amount of money you can call K, and that money is in pounds, so that we have a uniform taxable income on this left hand side. We are looking for the value of K, which we shall follow this step. The value of K, we have 6K, and this money is in pounds, is equals to 18,400. Divide by 6 on both sides. Divide by 6 on both sides. Your value of K, K in pounds, shall say K in pounds, will be by 6, you divide and you use your calculator, you get 3066.67. This is the amount you find on this last slab for taxable income. So total taxable income shall be what we have gotten. Total taxable income shall be the value of K, which is 30,000, that's 33,066.67, plus the rest of the money above it, 4,600 plus 3,800, that's 800 plus 4,200. That is now going to be the total taxable income. And this one gives you, this shall give you, if you use your calculator, you shall get a total of pounds or Kenyan pounds, 15,666.67. And this money is per annum. So this is the whole amount, the whole year per annum. Back to the question, taxable income in Kenya pounds per annum. We are through with getting the 4 marks. We had gotten 2 marks. We have 4 more to go. Basic salary. We now have the taxable income. You have to convert this back to per month because it is per annum. Then look for the basic salary. So we're looking for basic salary. Remember, we are now in Roman 3. And in this case, we already have taxable income, which is 15,666.67. This is our taxable income. You need to go back to the question and check whether this person is housed by the employer. And if not, you will use the normal formula for finding taxable income. So you will say, actually in our question, there is nothing like being housed. What he has been given is the house allowance only. So we shall say taxable income is equals to basic salary plus allowances. We have the taxable income, we don't have basic salary, we have the allowances. So we make basic salary the subject of the formula. But before we do that, we have to convert this money into per month. And that is, it is in pounds. We multiply with 20, make it shillings. We shall have, and of course, divide by 12. Because this is per month, per annum, we divide by 12. So we multiply with 20 over 12 to make it shillings per month. When you do that, this one multiplied by 20 divided by 12, you get 26,000 now in shillings. You get 26,111.11, and then as your taxable income, which is equals to basic salary, which I'm calling BS, plus allowances. The allowances, you can see we have just one allowance, that is house allowance, so we say plus 10,800. As usual, make BS the subject of the formula. So we shall say basic salary is equals to, you take this 10,800 to this side and you subtract. So you shall have 26,111.11 subtract 10,800. This is what you get as your basic salary. That goes to 15,311.11. You have gotten the basic salary. 2 marks to go. And this basic salary is per month because people earn on a monthly basis. The last one is net salary. The last one is net salary. We said net salary is equals to gross income, which you can say taxable income. Let me say TI. Gross income or taxable income minus deductions. And from the look of things here, this person has only one deduction, and that is tax. The tax is the only deduction in this question. The gross salary is basic salary plus allowances. Gross salary is basic salary plus allowances. But we have already done that one, and we have it as, we can even add it. I think we have 26,000. We got 26,101.11 as our gross. That is the inclusion of basic salary plus allowances. Then we subtract deductions, and there is only one deduction in this question, and that one is the tax, 4,000. So we subtract 4,000 shillings from the gross salary. What we get is 26,111.11 minus 4,000 gives you 22,111.11. That gives you the last 2 marks. One more thing, ensure you convert your units to be in tandem with what you are given in your table. Thank you very much for watching my video. Subscribe Wilfred Momanyi Onkangi-Kiongozi, and we shall be learning together. Have a nice time.